All right, hello and welcome back everyone. Doug here with the LincolnList.com. I want to welcome you to another episode of Happy Hour with the Lincoln. We're on number 19 already. I got a good one on tap for you today. We're going to test a very interesting whiskey, and then we're going to talk about posers. You hate posers, I hate posers, so we're going to do some poser calling out. And before I start, I just want to kind of make mention, last week in the Happy Hour, I talked about the Lincoln Million Swing Trading Program, which is also known as the Part-Time Trader. And we've added 3 more wins to that this week, so it's now up over 13%. I'm just going to put a quick link right down here below in case you want to check it out. Go to the website, watch a couple of videos, and learn a little bit more about it. But having an outstanding year, and not just this year, but it was 54% last year. So the program is doing real well, and it's just about a good fit for everyone. So go ahead and check it out. So let's get to the whiskey, right? I mean, that's what we're here for, is we're here to talk stocks, talk whiskey, tell stories, and all that good stuff. And our guest for today is the legendary #1 first distillery ever in the state of Kentucky, Evan Williams Straight Kentucky Bourbon. That's right, Mr. Evan Williams himself. Now this bottle is going to set you back a whole $10. And maybe that tells you something, I don't know. But we're going to give it a shot because I've never had it. Now according to their website, it's telling me that Evan Williams is the second most popular bourbon whiskey in America. Now, I don't know if that's awesome for Evan Williams or what does that say about us, but that's what it says. That's what it says. So anyway, you would imagine that the person that would own this would be named Evan Williams. And before I tell the story, let me go ahead and give it a test. Well, it smells like bourbon. We'll give it that, right? It's kind of watered down. It tastes kind of watered down. It's actually probably a step lower than Jim Beam. You know, it tastes really watered down. Let me try another one. I don't know. I'll let it roast around the palate for a while before I comment it. So anyway, let's talk about Mr. Evan Williams. Apparently, back in the 1700s, this was another immigrant like the Chivas brothers. And he just comes over here to America, seeking his piece of the American dream and his fortune. And all he wanted to do when somehow he settles, let me back up, somehow he settles in Kentucky. How he got from Scotland to Kentucky, who knows. But he ends up in Kentucky, and he's like the jack of all trades. He's like a little entrepreneur. According to the website, he was a farmer, a building contractor, a harbor master, a businessman, an inventor, and also a civic leader. So this guy was doing it all. So he's obviously, driven, personally driven. But his only passion in life, somewhere, it doesn't explain this on the website, but his passion in life was to create whiskey, just like Mr. August Bullitt wanted to, right? This was his thing, just like the Chivas brothers. They just wanted to create this whiskey and share it with the world, what great people they are. So he spends his life, distilling or manufacturing this whiskey. And like I said, according to the website, it says it's not the #1, but the first distillery in the state of Kentucky. Whether that's true or not, I don't know. But that's not what I want to talk about, because they all have an interesting story. The thing I find interesting about this one is, do you not find it eerie similar to the way a Jack Daniels bottle looks, right? I mean, it's black. It's even got Evan Williams. It's like Jack Daniels, Evan Williams, Michigan Smith whiskey. Like, you could just come up with a name and it's like, were they related? But their bottles look the same. They got the same kind of design and the same kind of decor on it. I mean, it's a little bit different. But if you're just glancing through the store from like passing through with your eye, you might think this was Jack Daniels. So somewhere between Jack Daniels and Evan Williams, somebody is posing. Somebody is biting off the other one. Somebody is stealing the labeling. Now, I don't know who it is. Now, you would think maybe it was Jack Daniels, since Evan Williams was the first, but we don't know what his first bottles look like. Very interesting, because this is the kind of world we live in. There's always a copycat. There's always someone trying to pull a sleight of hand on you. There's always somebody trying to profess that there's something that they're not. Remember we talked about that with the Finlaugen? And that brings me to my rant. We know in financial media and in the financial world today, this is like a patch, like a cornucopia of posers. There's always people professing to make several millions of dollars, several thousands of dollars in the first 10 minutes of the day, and they're out on their boat or they're driving their fancy sports cars. They're drinking it up with models and doing all this good stuff. So we know there's a lot of posers in our business. But I'm not going to talk about those posers. I want to talk about the biggest threatening type of posers. Because if you eliminate these posers, you'll actually make a lot of money as a trader, or you'll stand a better chance of making a lot of money as a trader. And those are the biggest posers of all, which is the financial media. The people that you see on like the CNBC, Fox Business, Bloomberg, they're the absolute worst stock advice posers of all time. Now, I've gone through this before. I think I did it in a whiteboard where I talked about, CNBC and other financial media outlets is a very detrimental thing to your career as a trader, because one of the biggest things that I did, one of the bigger turning points when I look back at it and say, what were a couple of things that really shifted you from an amateur or a losing trader to a successful trader? And one was eliminating all financial media, and that includes like Wall Street journals. Now, maybe that stuff works for other people. It just didn't work for me. It just became noise. And like I said before, it's not necessarily a CNBC fault or a Fox Business. I mean, they're in the entertainment business. They have to come up and think. It's hard enough for me to come up with a good idea every week to talk about happy hours. It's got to be hard to talk about something interesting and exciting related to finance all hours of the day, 7 days a week. So, you're going to constantly have weird stuff. And the thing I'm going to make, if I can, I'm going to show some charts here. The performance, the people that they put on TV that are telling you about buying stocks. One of the coolest things I think I find out right now, or one of the things I want you to kind of understand, is last year, the market was going down in January and February. And everybody on TV, Gartman, Doug Koss, Kramer, the crew from Fast Money, everybody's like, sell everything, sell everything, sell everything. Well, at the end of February, the market just rallies and it just blows through everything. This is the same financial media that later would tell you, hey, Brexit's going to kill the market. Brexit's going to kill the economy. Brexit, 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 Brexit. Brexit doesn't last longer than 2 days, then the market's at an all-time high. You already know fresh in your mind about the whole Trumpmania thing. Trump's going to kill the market. The market's going to die. The market will go under with Republicans. We will all be sitting out there on the corner eating beans from a soup can. And as I'm doing this, we're still at all-time highs. Now, one of the things you've got to understand, especially as a new trader, they appear because someone runs a capital, like they're from such and such Seagate Capital or such and such capital, or they were a former hedge fund manager, that they carry some weight in the financial market. Well, what I want you to know is that all of these fund managers and all these institutional managers and capital owners or whatever, they really don't have to be good traders, because these people make most of them have like $100 million or more. I'm probably lowballing. Some of them have like 500 million, $1 billion under management. And what they do is they charge a monthly fee regardless of their performance. So you can do the math. If you had $100 million under management, and they usually charge like a 2.5% to 3% fee. So if you charge 3% on your whole entire capital balance, which was 100 million, let's say it was 100 million, that's a lot of money every month, right? Whether you made a dime in the stock market or not. And if I can remember, I'm going to put up some charts. I'm going to show you what the Fast Money crew and these other CNBC and these other popular stock traders, what their annual returns are. And this is how these people get by. They don't get by on their performance of the market. They get by on management fees. Now, in the case they stumble on a really good year, they'll charge like 20, 25%. So that's like how a standard institutional work, like a capital firm or a hedge fund, is that they'll take a 2.5% to 3% management fee of the entire balance and a 20 to 25% profit fee. So, if they trip up and have a good year, or they outperform the S&P by half of a point, then they'll get an extra money. But what I'm trying to say to you is the pressure is not on those people to make consistent returns. Sure, there's some kind of pressure. They obviously want to do well for their customers, But they're still going to get paid regardless, if you understand what I'm saying. Unlike, just your average dudes on Twitter, we actually trade for a living. Like, we don't make money on management fees. Like, I don't have a managed account where I'm making money on management fees. I don't get 20-25% of profit from, a big account. It doesn't work that way. I make money off of the trades that I make. I'm just one of the few that share my knowledge with it. So one of the things I wanted to talk about, or the thing I'm trying to make here as a point, is there is a lot of posers in financial media. It's easy to spot the ones on Twitter with the egg avatar, or this person that comes out of nowhere with 2 months trading, or the 18-year-old kid that's driving a Ferrari with models in their car and showing pictures of Glocks with stacks of 100s. That stuff is comical, but most people are smart enough to see through that type of marketing. But these people that are on TV, this is what's force-fed to you all the time. And when you're starting out, that's usually where you end up funneling. You go to financial media television like CNBC, Fox Business, you pick up an article in the Wall Street Journal. Now, I'm not saying that stuff can't be beneficial for you as a trader later on. I think most people start out that way, and then they continue to watch it just for entertainment value, because that's really all it is. There's no actionable alert that you're going to get from the television. By the time it reaches the TV, we've talked about this before too, by the time it reaches the TV, it's worthless to you. It means nothing to you. And what they say means nothing to you. So the thing we're talking about today when we say posers, and as I mentioned earlier, one of the biggest things I did was take away all of the noise, the outside noise. That made a very huge difference for me as a trader. Now, for some people, like I say, it may work. They may have something that they can relate with. But for me, the more simpler I made trading, the less I listened to other people, the better I did. And it's a common thing to fall into, because you think when you start that you're not smart enough to know, that you're not intelligent enough yet, that you don't know enough, that somebody else looks like a professional, talks like a professional, wears a suit and tie, that they're obviously a professional. They must know. But they don't always know. There's a lot of people in our industry that's been floating by for years without consistent returns, without consistently earning their money from revenue generated from trades. And those are the people you're looking for. If you're trying to trust someone, you want somebody who's there every day, who's working, who's making money in the market, not somebody who's managing funds and they're only out for their own agenda, talking about the stocks that they like, the stocks that are in their portfolio. You know the stories about Gartman. He's all over the board. He says oil isn't, this is a guy who's worth millions, more than that. Apparently one of the most visible faces on CNBC, who last year said, oil will never be $55 in my lifetime. Yeah, it's over that right now. Who just was a big bear, who just went totally bullish while the market's at all-time highs. I mean, these people are a cluster, a cluster F. A cluster F. Anyway, I think I've made my point. It's time for us to get down to business and talk about stocks. But before I do that, just remember, posers are everywhere. What matters is what you are doing. This market is all about you and what you can do and how you can benefit yourself. Block out the noise, make it as simple as possible, and I promise you your results will get a lot better. So let's talk about the stocks. Let's get into the stock market. So let's take a look at the SPY, and this is like the little engine that could. It just refuses under any circumstance to stay red. If we all had the inner drive and the inner power of the SPY itself, we would be golden, right? I mean, this thing just doesn't take days off. There was a couple of spots here where it looked like it might pull a little bit. And I think a lot of traders are waiting for that. It's not that we're against bullish markets. It's just you get a big run like this and you become very, very cautious as a trader. You'll learn that as you go on. There's times when you can really be aggressive and you got all the cards playing in your favor, and the times you need to be a little bit conservative. So when you're getting up at anytime you hit all-time highs and the euphoria gets going, it's always a time to use a little discretion and be conservative. But this thing keeps finding a way. It's like if it doesn't go down and stay down by lunchtime, it's up. And then, there was a couple of days, like Thursday, we saw a little bit of red. me see if I can put the chart up here at the top. You know, you got a little sell-off, but it was just a minor sell, and then it finishes the day higher. So it makes a low prior to lunch, and then kind of like, you know, it just gaps down a little bit on Friday, but then just melts, kind of stays, you know, sideways for most of the day, looking like nothing's going to happen. And then late in the day, here comes the old, you know, old faithful ramp late into the close. So a little big ramp. Still, no signs yet of anything that's going to make this market really back test. I would like to see it come down a little bit. That way I could be more aggressive. Not that I don't, like I said, not that I don't like bullish markets, but I like to see it come back a little bit. So some of these charts reset and you could use more size with your trading. But it's a day-by-day thing, and this is what it is right now. So we'll kind of judge that. As we look at a couple of stocks, there's a few old names that have been around the block with a while. One is OLED. Now, I tried a little bit of a short on OLED Friday, which wasn't huge. You can tell it was, you know, it wasn't something that you're going to make a lot on, but you know, you just didn't really get a big pullback. One of the things I know, I've had my fair share of OLED, and I've never really. This is one of those stocks that, you know, every trader has them. There's a stock that is like your mortal enemy. It's like your speed racer to racer X. It's like your mortal enemy, like I said. This is one of them. It's one of the stock I've never really banked on OLED in either direction. And then it goes up and I'm like, oh, it's just up so much, I'll try a little bit. And it just never, you know, I never had the patience to make it work really well. The thing about OLED is that it is so trendy. Like there's certain stocks that will break out and they can't hold their breakout. Then there's other cultish, we call them cultish stocks. And it's like they get under these, like Tesla's a cultish stock. People are just going to flock to it by nature. And OLED is that way. It's cultish. So it's been a little while. It's just kind of been hanging around here, building some patterns, comes out of earnings, launches up here. I probably knew it ahead of time. I was like, this thing's not going to pull back. It's OLED. So my point now is, as you're going into Monday, I'll bring it up. If you start breaking out of here, I just got a feeling OLED is one of those stocks that's just going to run because it's OLED. And I don't know if I'm going to trade it again, but I think if you can grab it at a cross of 82.94, 83, this thing probably stands a pretty good chance of adding to this, even though this is already a steep move. You know, even this thing is up 20% today is bizarre. You know, it's something that needs to be looked at. I mean, if it continues to gap up, I'll try to short it, but it's always been kind of difficult. Now, on the other hand, we've got AAOI. Now, this thing is I mean, this thing, I don't know if it's just stupid overbought, or this thing is the next QUI, C-W-E-I, or ACIA. But this thing, you know, is up monstrous since January. I mean, we're up about over 100% since January. Now, they came out here, got a gap up based on higher guidance, and they've been rallying ever since. Then they had higher guidance, and the thing just rips. I mean, Friday, the thing went up. At one point, it was all the way up at almost $50. So, you know, it depends. It's tough. It's tough to call right here, at least for me. You know, I know a lot of people are just going to, you know, you're starting to get a lot of people interested in it. And getting interested in longing a stock that's already up 100% in a month is not probably the most, you know, the most rewarding, financially rewarding strategy that there is on the planet. But, you know, I had a good fade. We're just going to have to see how this thing works out Monday. It's just, it seems like a pretty good short up here considering. But, you know, lately these stocks haven't been just coming right now. But this thing is up an awful lot. It probably needs some kind of resting period and some kind of back testing. You know, we'll see. Let's just go with that. We'll see. Restoration Hardware, RH. This is another like OLED. I don't think I've ever been on like the glorious side of RH either. But this was one that was up at 1.30% on Friday. Another huge runner. Now this came right into resistance. You can look at this daily chart. It almost tapped that 33.30 area that was upper resistance from the 20th of December. If there's some way it can tap that again, I'd love to short this. It just, you know, It just didn't quite work out the way I wanted to Friday. There was some good money on it. I never made it on the second short. I got into the first short right here and collected a little bit of money down into the VWAP, but never got into the second one. But we'll see if Restoration Hardware can work out. Now, somebody I've been kind of, let me say baffled, was Blue. Blue. Because at one time I was a long of Blue, and all this thing did was melt to the death pile that it was. I mean, it just went down and down. Look at this. And it's kind of a trendy stock, but you know, over the last couple of months, you know, going back to the highs from December, it's been a pretty constructive pattern. It's been very stable all year. And now you're kind of just like, you look, you got some flag patterns here on the daily. You broke out the highs, just an orderly pullback into the 10-20 moving average. Then it kind of curls back up here and then just starts, you know, ripping out. It's just a very orderly stock. So this might be something to look for additional breakout. I always hesitate when things are already at highs. Like the breakout point was right here at, let's see what this number is on the daily chart below, was 81.50. So you're $1 above the breakout. I always like back testing when I do long. And what I mean by back testing is just come back, you know, like this. Not when you break out, because a lot of people start chasing them in here on this intraday chart like this once it starts breaking out. But I like them when they pull back like this, and then they kind of build a base inside of a moving average. And they come out of that base is a pretty good long. I like them that way. So if that's able to do that, maybe come back into the 10 moving average, which is 81.69, excuse me. 80.73 would be VWAP. That would be even better. I don't know if it's going to make it that far the way the market is right now, but we'll see. I like this Blue. Well, everyone, I want to thank you for listening to me yodel and personally witness me drinking this incredibly rich, deep, savory Evan Williams. It just tastes like bourbon. And remember what I said earlier. There's posers everywhere. We hate posers. If you're the only person that you can trust in the hands of your own money is yourself. Someone can teach you how to trade or show you a way, but ultimately all the decisions fall on your lap. And the biggest thing that you can do to help yourself become successful is block out all that noise, is eliminate those posers from your life. Also, don't forget, take a look at Lincoln Million, also known as Part-Time Trader, on an incredible roll. Like I said, it's one of the easier things to follow through because there's only 1 to 3 trades every week. So it's low on commissions if you have a brokerage account. You're not making a lot of trades. It's easy to follow along. It's easy to understand the process, and the results have been amazing. Not just this year, but last year and even the year before, and since inception of the program. So go ahead and check that out. And I want to thank you again. You know, thanks for listening to me yodel. I have no idea what I've been talking about, but I'm sure it was awesome. If you need help with trading, make sure you visit thelincolnlist.com. Until happy hour episode number 20, we're going to crack the big 2-0 next time. We're making some progress. Thanks for watching. Take care of yourself. Have a great week of trading. Talk to you next week.